Welcome to TradeTheMBI.com. This is John's Reporters for June the 1st. Lots of excitement and not so much. So, again, the ranges are just fantastic. Every time we get a dip, there was a little bit of concern when the day started about whether or not Trump would issue some more scathing indictment of China and cause a little market turmoil. It turned out to be very soft and benign, just a few little technical items that really everyone kind of expected anyway, so no shock, and the market went up from there. And again, you still have the Fed listing all the different things they're buying, so everyone sees that there's active participation from the Fed. Some people are talking about June, that the Fed will back off and things will start. I mean, they've started this train. You don't just stop a train in the middle of the track and think that you're done. You slow it down, yes, but it still provides a base flooring to a large degree. Now we're getting to a point where, do they really need to at these values? No. But the market believes that that baseline exists. They're sucking up supply of all other assets. There's no return from any version of treasury or anything like that with a virtual negative yield. So where are you going to go? Equities is all you can do. And then you're stuck because you got to find companies that used to be offering dividends and stuff have all suspended them because of the economic conditions. So you've got a lot of problems, and they're getting worked out just by building up price and trading back and forth. And that's why we're seeing the nice ranges. Now, if you look at the NQ, of course, we're right back at the peak. So if you look at it from a relationship standpoint, this is mostly a tech rally, because if we go back over here and you look at the highs for the S&P, huge disparity between the two from a ratio standpoint. So this has clearly been a tech move. Most people didn't think that Trump's comments on regulating of Google and any of those were likely to go anywhere without court challenges. So that's all many months off the track, and whether or not, with a split Congress, is anything likely to get passed on that kind of legislation. As much as you hype it, probably not. Euro continues to skyrocket as well. Actually, today, June 1st, everything's open. You can travel amongst European countries. They're saying by the mid-month, most of those other little restrictions that are in place will be removed as well. So you could have a fully open Europe, which would be faster than some places in America, because with some of the holdback states, mostly blue states, holding back opening, you have an interesting disparity within the United States, and without that unity, that certainly bolsters the argument for the EU outperforming, and thus the strength of the euro is also a bonus to the U.S. from a dollar standpoint. And the Fed is still providing a ton of liquidity to the EU, so as long as that takes place, there's plenty of dollars, and they're just going to keep sucking them up. From an oil standpoint, again, we broke out slightly to the higher. Now, I think that once you get over 45 range, then it becomes interesting from an inflationary standpoint, and then we can start talking about what does that do to the market, what kind of pressure does that put on the Fed. Do you see artificial rates for corporate bonds and things like that start to rise as the alternative to treasuries? That's going to be an interesting dynamic as that starts to move forward. And when that starts to take place, as we expect, gold, which is near the peak levels here, should break out into all-time highs, not too distant future. Looking into how we ended the day, this was that afternoon after the brief little swoon just below that 3013, which we had as a marker. Couldn't quite make it down to the 2990. It stopped right at that 3000 plateau, which is very convenient, and broke up above there, moved back above our other previous algo at the 3050, and closed all the way up above that. From an intraday standpoint, though, it's pretty good action. I mean, again, these ranges are substantial. 20 and 30 point moves in a lot of cases for the smaller ones, and even bigger for the broader moves. And we're excited by that. I think that kind of volatility is likely to continue. And if we end up with a little bit less from a volume standpoint, you're going to see even more dramatic moves in the after hours. We've already talked about this, that the majority of movement in the last, dozen weeks or so has been strictly in the after hours market, where there is lower liquidity and the big player can make a huge move even before the market's open and sort of set a direction. And that's been the Fed's approach on this one, because it's the least expensive and you can sell into that bonus float and start over again. So they end up with, zeroing out, being on the plus side of it, and then just rinse and repeat, and you can just keep doing that at successively higher levels. There's no limit to how high you can drive the market doing that too. So, people that talk about, the ridiculous nature between valuations, anyone who thought the market was based on a valuation was foolish anyway. It's never been the case. The multiple that everyone then says, well, it's traditionally higher multiple, that's made up. It's just completely made up. As we talked about, this inflationary effect of the devaluation of the dollar and that over time, this market has to be substantially higher than it is right now to justify that. So would I say we're almost at depression level valuation based on the devaluing of the dollar that existed? Yeah, ironically, we are less than 50% off where we should be. If you're, going to take into account the fact that you devalued the dollar as much as you have with the amount of influx of new capital. So from that standpoint, 3,000 when you could be at 6,000 for the amount of, devaluation. Some could argue very effectively that the market is extremely undervalued, and that if you do see significant economic activity, seeing 3,500, 4,000 in the coming quarters is not out of the range of possibility. So I know that's just devastating for people to comprehend or wrap their head around, but we just have to go with what is, and we get the readings, the setups, and that's all we can go with. So as always, I will continue to update things and let you know where we're at with new algorithm setups and that to adjust the paint bars and that, and we will go from there. As always, trade well. We'll talk again soon.